Hey, good afternoon, everybody. It's Jeff Gibby over at MetaStock. Sorry, Trey, that you didn't get answer your quick poll questions. Yeah, once in a while we do those. I like to kind of know what people are trading. It's interesting to me what their outlook is, and more importantly, how. Let me go ahead and hide my status here so we don't get pop-ups. Okay. All right, cool. And that kind of stuff. So, yeah, if you show up early, you might get a poll. It's kind of fun. I enjoy it. I enjoy giving them. Anyway, let's go ahead and get started. Thanks for coming, everybody. I know this is your favorite part. This is why everybody should show up a little bit earlier right here. And that would be our legal disclaimer. Oh, wait a minute. All right, well, I'll just have to recite it from memory then. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. Let's see. Traders should be aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software trading strategies or any information provided in connection with the company. Almost got it. Almost nailed it. Anyway, today I want to welcome James Harte. James is has given a few presentations. Today he's going to be talking about the RSI indicator. Really, really good instructor. You're going to enjoy it. And I'm going to go ahead and turn the time over to James. James, let's go ahead and get you in a presenter role over here so you can share your screen. All right, so you should have the screen sharing option available.
Okay, great. Is that sharing now? Can you see the slide screen?
LFX Meta 15.
Brilliant. Okay, well, thanks a lot for that introduction and for that beautiful recitation of the legal disclaimer. I'm sure
I stumbled a little bit. Usually that thing comes up in my brain while I'm sleeping or whatever.
Pretty much spot on. It was pretty much spot on.
All right. Well, I'm going to go ahead and turn the time over to you. I'll be here if you need me, and go for it.
Brilliant. Okay, thanks a lot. Well, thanks a lot, everyone, for joining in today. I'm not sure what time it is where you are. And first of all, just to be clear, this isn't going to be a presentation on repetitive strain injuries, though I'm pretty sure that if I spend any more time in front of the charts, I'll be doing one of those at a later date. So in this session, we're going to talk about the Relative Strength Index indicator, and this is one of the most popular Forex indicators out there. So for those of you who are already familiar with Forex trading, I'm sure that this is an indicator you've probably come across quite a bit. It's referenced in a lot of different educational material, and it's used by a lot of traders too of all variety of skill levels. So I've no doubt that you've seen countless charts with RSI included. Now, for those of you new to Forex, again, this is an indicator that you're likely going to see pop up quite a lot, and so it's good to get a solid understanding of what the indicator is and how you can use it. And indeed, should you use it at all? So that's what we're going to look at today, some different uses of the indicator and sort of the pros and cons of the indicator itself. Now, I'm not going to bore you with the who developed it and that type of stuff. We're just going to get right into the useful information. So first of all, what is the RSI? The absolute bottom line of the Relative Strength Index indicator is that it is a momentum indicator, meaning that it measures the underlying strength in the market and is identifying price swings as either overbought or oversold or somewhere in between. So the indicator typically looks like this. It's already set up with two levels marked already. You can see the 70 level above highlights what is typically seen as overbought, and the 30 level down below highlights what is typically seen as oversold. Now, these levels are adjustable, so you can make them more or less extreme, but these are the standard settings alongside a 14-period look-back. Again, you can change the look-back period, which will make the reading more or less sensitive. Obviously, the further out you go, the further you look back, the less sensitive the reading is going to be. And the closer you bring the period in, the more sensitive it is going to be. So again, 14 is the default setting, with 70 level marking overbought territory and 30 level marking oversold territory. So that is what the indicator looks like, and that's the basic premise of the indicator. It's very simple, very straightforward. It's measuring the underlying momentum in price, and once the indicator rather moves up into the 70 level, it's suggesting that price has been overbought, and once it hits 30 to the downside, it's suggesting that price has been oversold. So how can we use the RSI indicator? Well, one of the most common ways, one of the most popular ways to use the indicator, which you've probably guessed by now just from that introduction, is looking to use the indicator to fade price when the indicator moves into extreme levels. And by fade price, I mean looking to trade an anticipated reversal. So where the indicator is moving up into the overbought territory, we're looking for price to reverse lower, and vice versa, where the indicator moves into oversold territory, we're looking for price to reverse and trade higher. So let's look at an example now of that in action and talk about what we're seeing. Has anyone got any questions at this point? That should all be pretty clear so far, but just let me know if you have any questions, and periodically I'll stop and answer a few of those. No, all good. Okay, great. Okay, so looking at this example of sterling dollar on the daily chart over the last few months actually, and you can see highlighted on the chart that there have been a few occasions where the RSI indicator has moved into extreme levels, and highlighted also on the chart, you can see how price has reacted from these points. So first of all, we saw price trading up into these initial April highs, and as price was trading up into that level, we also saw RSI moving up into overbought territory. So we actually pierced the 70 level there, and you can see clearly how price responded. So we saw that correction lower as momentum corrected lower also, showing buying weakened in the market. So we got a little kickback from that level there before price took another stab at highs. So we made another run higher here. And again, as price took off to the upside once more, you can see that it was accompanied by bullish momentum on the RSI indicator, until once again, as we topped out in May, RSI again piercing the 70 level, so again moving into overbought territory, preceded this reversal in price. And we actually saw a much deeper correction this time. So price came all the way back down, almost to the same level that we saw from the correction from the previous high. And RSI itself corrected much lower, with the level coming all the way back down, almost into the middle of the spectrum. So we can see that following that correction, we then got one further move up into the highs. And as we moved into that area, we can see that once more RSI topped out, hitting overbought territory, and we saw another reversal lower. We then chopped around slightly over this summer period. We moved a little bit higher before we saw a much deeper correction, a much more sustained sell-off. And this time, with price moving sharply to the downside, RSI indicator flagged momentum as being oversold for the first time in this period. And again, just as we saw with price reacting from the indicator flagging overbought momentum, look how price reacted from the indicator flagging oversold momentum. So as we got that oversold reading, we can see that price reacted sharply, trading back higher off those levels. So it should be pretty clear just by looking at this basic example how the indicator can be used on a very basic level just to fade price action, trying to establish price swings as being either overbought or oversold as identified by the indicator, and then looking to trade an anticipated reaction. Now, along the same lines as that, we can also see how the RSI indicator works as being a great trade filter too, if we think about market timing. So if we know that as price moves higher and RSI moves into overbought territory, we're likely to see, or at least there is a chance that price is going to reverse, then we know that as the indicator is registering these overbought levels, this really isn't an area where we would be looking to get long in the market. So we wouldn't be looking to buy while RSI is moving into overbought territory. And similarly, as the RSI indicator is moving into oversold territory, that's not really a great place for us to be looking to sell. So really what we want to see is a RSI indicator showing oversold momentum where we're looking to get long in the market, and the RSI indicator showing overbought momentum where we're looking to sell the market. So that is the fading method. It's very simple. You're waiting for price to move into, you're waiting for the indicator rather to move into extreme levels and anticipating that momentum is exhausted, and so you fade price trading at reversal. So that's the bottom line of the fading method. Is everybody clear with that so far? Are there any questions about that? No? Okay, great. Okay, so yeah, that's the fading method, and again, as I say, it's very common. It's probably the most popular method of using the RSI indicator, but does that necessarily mean that it is the best? Now, there are a lot of issues with using the RSI indicator to fade price, and really the issues stem from the fact that its efficacy in this capacity, so in this example here, the reason it's working so well is due to the range-bound conditions that price is trading in at the time. So using the RSI indicator to fade overbought and oversold momentum in the market works very well in range-bound conditions where price is simply rotating back and forth, making nice large swings in either direction. But once price starts to trend, once momentum starts to really hammer in one direction, this is where using the RSI in this most basic form can start to prove very tricky, and you can start to run into problems. So let's look at an example now of where trying to apply this basic method of fading price based on extreme RSI readings really isn't your best strategy. Okay, so this is actually the price action leading up into the period of time that we were just looking at in the last example. So you can see actually the circle here highlighting that first April high that we were just looking at. So we can see that sterling dollar was selling off quite heavily over the 12 months leading up to our example. We topped out in summer 2014, and then we saw that sustained bearish trend with price selling off quite relentlessly. Now, as price made its way heavily lower from those summer highs, look just how many times the RSI indicator registered oversold readings. So there are actually around 5 or 6 times that the indicator was registering momentum as being oversold in the market. So in those instances, if we were simply applying our basic fading method of looking to buy the market because RSI is flagging momentum as oversold, and we know that momentum oversold likely precedes a reversal higher, well, these are clearly instances where we would probably have been stopped out. So these would have been losing trades if we were using that basic method. Now the issue is that as RSI uses quite a basic technical calculation to measure momentum and doesn't account for the actual underlying order flow, so it works really well in low volume conditions like ranges, where the RSI can quite effectively pick out the extremes as price rotates. But once price starts heavily trending, as we saw here, then typically RSI gets caught offside, and the reason for this is what we tend to see happening is RSI making only very shallow rebounds off the oversold limit before once again reversing and flagging momentum as being oversold. So again, if we're using that basic fading method, then we would be triggered into another losing position as we incorrectly try to buy the market expecting a reversal higher, not taking into consideration the dominant trend. So trying to fade RSI in trending conditions is effectively, as we would say, looking to pick up pennies in front of the steamroller. So you're likely to just get completely blasted there. That's not a strategy that we would encourage. Now, does this mean that the RSI indicator doesn't work and that you should simply discard it? Well, absolutely not. And simply, all we've done here is identify 2 sets of conditions where 1, RSI is working very well in range-bound conditions, and 2, in trending conditions where the RSI indicator doesn't work that well, using that basic fading method. So at this stage, there are a few solutions. Either you can look to fade RSI in range-bound conditions only, or you could look to modify how you trade the RSI indicator in trends. For example, you could think that after one losing trade in one direction, you are going to wait until RSI touches the other side of the spectrum before you take a trade. So knowing that the RSI tends to underperform in trending conditions, you could think to yourself, right, if I get hit trying to trade the RSI on one side of the market and price pushes lower, so in this scenario, for example, so let's say that we buy price here in line with the oversold momentum reading that RSI is giving. Well, once that position gets stopped out and we can see that price is pushing lower, we could think to ourselves, okay, well, we're likely moving into a trending phase here, and I know that RSI doesn't typically work that well in trending markets, so I will wait until RSI registers the first overbought momentum reading before I enter back into the market. So this is one way that you could modify your trading of RSI to mitigate the losing aspects of the indicator. Now, as you can see, that would keep us out of all of the subsequent losing trades that occurred over that entire downtrend. Now, you might think to yourself, well, that's great, but it means that I don't have any trades in sterling dollar for almost a year. But two things. One, no trades is definitely better than a succession of losing trades. And two, there are a whole range of currency pairs, and indeed a whole range of markets that you can trade. So whilst one pair is trending, another pair is going to be ranging. And so there will always be markets you can trade, there will always be opportunity. And the key thing is that you identify favorable conditions for the strategy you're looking to employ. So it's important that you think to yourself, right, if I'm looking to fade price using the RSI indicator, then I know that I want to find range-bound markets and I want to stay away from trending markets. And then what you can start to do is find the best ways, the best parameters of measuring conditions to establish range-bound conditions which you've identified as favorable for this strategy. And before you know it, you have a fully fledged trading system there. Okay, so before we move on, are there any questions I could answer about that? You should see the chat and question function there, so if you have any questions, please don't hesitate to ask, and I'll do my best to answer them as we go along. Okay, so going back to the uses of RSI, another way that we can look to use the RSI indicator is to trade RSI divergence. Now, when we're looking to fade the RSI, remember we're looking for momentum to signal exhaustion by moving into extreme levels. Now, when we're looking for divergence in the RSI indicator, between RSI and price rather, we're being a bit more strategic and a bit smarter in how we use the indicator. So with divergence, we are looking for situations where the indicator readings don't support the moves that we're seeing in price, and so again suggests that a reversal is likely. So if we go back to the chart that we were using in the first example, sterling dollar over the last couple of months, we can see that as price made that initial high in May, RSI was registering overbought. So we know there was a lot of bullish momentum in the market at this point. We then saw a little kickback, RSI corrected lower, before we then made another run up into highs. Now, as we moved up into this new high, so as we succeeded this high, we can also note that RSI was itself registering a new high. So there was increased bullish momentum in the market at this point compared to when this high was made. So as price pushed through this previous high, we can reference RSI, which is telling us that there is more bullish momentum in the market at that point than there was previously. Now, this is where it gets interesting. If we look at what happened when we made the third and what turned out to be the final high, so the actual 2015 cable high at the moment, look what happened as we made that high. So as price traded up through that previous high, we can note that RSI wasn't supporting the move. So previously, where we saw price pushing through a former high, RSI was confirming the move, telling us that there was increased bullish momentum in the market, likely to see price blow through that high. However, at the point that we made this third high, that simply wasn't the case. We can see that RSI failed to make a new high, and so is signaling to us that the momentum simply wasn't behind the market at this point. The decreased momentum signals to us that the move is likely to run out of steam and it's likely to reverse. So we typically aren't seeing a breakout in these conditions. More likely we're seeing a quick push through the former high and then a reversal like we saw happen. Now similarly, look at the example over here on the right of bullish divergence. So we saw price selling off into September, making those initial September lows. We then saw price rebound higher, and then look what happens as we traded back down into the end of September, making those new lows. So as we pushed through those former lows, we can look at RSI and we can see that whereas RSI was clearly heavily oversold as we made those initial lows, giving us a clear oversold momentum reading touching the 30 level, well, at this stage when we made new lows, the RSI wasn't confirming the move. The RSI failed to make a new low, telling us, just as we saw with momentum leaking from the market to the top side, well, we're seeing the exact same thing down here. So this time, bearish momentum is leaking from the market, sellers are losing steam here, and bullish momentum is building. And as we make that new low, we can see that again, we fail to get a proper breakdown rather, through that level, and again, we reverse higher. So essentially, looking for RSI divergence at these levels, instead of just fading the extreme indicator readings, is a more conservative approach as we're waiting for extra confirmation on the move. So with the classic, rather the quite basic fading method, what we're looking to do is simply get involved in the price action as the indicator makes that initial extreme reading. However, with divergence, what we're looking to do is we're looking to be more conservative, more cautious, and we're looking to wait until the RSI indicator confirms that level as likely yielding a reversal. So we can see in both of these instances where price pushed past these former key horizontal levels, these former key structural levels, the moves were not confirmed by RSI, and indeed price reversed. So just as we saw the typical fading method of RSI holding quite a dual capacity, we could also think of this method in terms of having a dual capacity also, because what it can actually do for us, as well as identify these reversal points, is help us in terms of signifying a false breakout. So for example, if we are breakout traders, and in this instance on the left, if we are looking to buy a breakout, a break higher through that key resistance level, well, if we look to RSI, we want to see increased bullish momentum in the market to signal that we're likely to push higher. So if we look at this first level, the first April high we made, as we push through that level in May, we can look at RSI and say, okay, yeah, there is further bullish momentum in the market at this point, and we can see that price goes up beyond that level by another couple of hundred pips. So that is a good breakout trade confirmed by the RSI indicator. Now if we were looking to take the same trade as we made the third high, well, we can see that because RSI indicator was highlighting bearish divergence, then we simply wouldn't be looking to take that trade. Okay? If we're looking to buy a breakout higher, we want to see RSI confirming bullish momentum in the market, not suggesting that bullish momentum is leaking from the market. So whereas buying a break through this level was a good trade as it was backed up by RSI increasing, buying a break through this level would have been a poor trade, because if we had proper knowledge of how to use the RSI indicator, we could clearly see that there was bearish divergence in the market at this point, and this was a trade that, I mean, it could well have gone on, you know, to run on for a couple of hundred pips like this did, but from a risk-reward perspective, this simply is not a trade that we would look to get involved in, because it signals to us that it's likely to run out of steam. Okay, I'll just answer a few questions. I can see there's a couple popped up there in the chat, so let me just answer a couple of these. Blaine says we sell at the high and we buy at the low, right? So yeah, so that's right in terms of using the indicator in its classic capacity as looking to highlight extreme readings oversold. But what we're actually talking about here is using divergence not only to trade anticipated reversals, but actually to look to trade breakouts or to signal to us whether we should be involved in a breakout or not. So the point I'm making is that if we are breakout traders and we're looking to sell breaks of key levels, then we want to see RSI confirming those moves. So again, as we pushed higher here, breaking beyond that April high, we can note that RSI was moving higher than it was at the point that we made the April high, confirming that there is increased bullish momentum in the market. So buyers are being more aggressive at this point. There's more demand in the market, taking us higher. Again, on the downside here, if we're selling that level, if we were looking to sell that level, rather, a break of that level, then we would want to see RSI lower than it was when we made the low. Again, the divergence in the market highlights to us that momentum is running out of steam, so momentum is exhausted and we're likely to see a reversal. So that's the capacity in which divergence can be useful, in not only trading reversals, but in also trading breakouts or identifying false breaks and trades that you could stay out of. Okay, so that's the RSI, trading RSI divergence. Now, going back to other methods of how we can use RSI, one of the more advanced methods that we can use the RSI indicator in is actually trading channel divergence. So whilst divergence is really effective in trading static support and resistance levels, as we just saw, so in terms of trading horizontal support and resistance levels, the indicator is also really useful for trading dynamic support and resistance structures, such as channels and trend lines. And in fact, this is one of the main ways that I personally use the RSI indicator, is to highlight divergence within channels. So the same principle applies again. We're looking for a move in price which isn't supported by the RSI indicator, and again suggesting to us that a reversal is likely. So let's look at an example now, and I can better explain to you what I'm talking about. And actually, this is a great example to use, because this is a trade that I took myself in cable in the start of September, and I'll talk through what's happening here and how I traded it and what the setup is. Okay, so we saw a sharp sell-off in cable preceding the formation of this channel. Now, after this sharp sell-off, we then started to see price grinding lower in this neat channel formation. So we can see that price was clearly respecting the trendline highs and the trendline lows, giving us a textbook channel formation. Now, as price is moving lower in a bearish channel, we would expect RSI to be moving lower in tandem, supporting the move lower, telling us that momentum is increasing to the downside and price is likely to continue trading lower. But actually, look what we saw happening. As price was moving lower within this bearish channel, RSI was actually moving higher, showing fading bearish momentum and building bullish momentum. So as price continued to sell off within this bearish channel, momentum was building in the market to the upside, which, when I see these conditions materialize, signals to me that a reversal is likely. And as I say, this is a trade that I actually took in our live trading room, which we've currently launched on the Littlefish website. So if you're interested in that, you should check it out, which is currently on 30-day free trial. Myself and the other LFX traders are in there daily. So if you'd like to get involved in that, please do. So again, back to the example. As price was moving lower in this bearish channel, we can reference RSI indicator, highlighting that bearish momentum is fading from the market, bullish momentum is building, and so I'm watching for a reversal. I'm watching for a breakout to the top side through that bearish channel, and you can see that that is exactly what materialized as we got a break to the top side. I think my entry was long from 52.90, and then we saw some nice moves up into around, I think it was the 54 level, around the 54 level before we came back down. So that is a really great setup to watch for. It's a situation that I personally look out for a lot in the markets, where we get these clear price channels and then we get RSI highlighting divergence. So again, remember, that is what divergence, that is how we use it. It's to signal to us that the momentum isn't supporting a move that we're seeing in price. So price is heading in one direction, and instead of RSI confirming the move by accompanying it in that direction, RSI starts to signal to us that perhaps things are not going so well and a reversal is likely, because momentum starts to fade and build in the other direction. And that is exactly what happened here. So again, looking to identify these setups is definitely a strategy that you can look to work on and build into your repertoire of trading strategies. So is everyone clear on the setup there and what was happening? Are there any questions I can answer about that? Okay, great. So we'll move on. And we're going to look at a further advanced method of using the RSI, and this one is particularly interesting. And this is using the RSI indicator to trade RSI channels. And this is where we start to get really clever with the indicator, is in channeling the indicator itself. So whereas we've seen in this example that we've applied a price channel to the price chart, we can actually go beyond channeling the price charts. We can actually start to apply trend lines to the RSI indicator itself and create trading opportunities this way. So let's look ahead now at an example and talk about this method. Now, my preferred way of employing this option is to look for RSI channels that form within price trend consolidation. So I'll just talk you through what I mean by that. Essentially, when I'm looking to use this method, what I want to see, the conditions that I always want to see in the market, and again, going back to what I was saying about identifying favorable conditions for fading price using RSI, regardless of what strategy you employ, so regardless of however you trade, you always want to be thinking in terms of favorable conditions and unfavorable conditions. So you always want to be increasing the likelihood, stacking the odds in your favor of your trading strategy being successful. So you always want to be on the lookout for the conditions which you, through your homework, through your chart research, have identified as being the best conditions for your trading strategy. So when I'm looking to trade RSI channels, what I always want to identify first is a dominant, a heavy price trend, and then I'm looking for clear momentum channels that build counter to that price trend before a breakdown, so preceding a breakdown, where I can look to enter in the direction of the trend. So this is already a higher probability trading strategy, because you're looking to trade in line with a dominant trend, which again is always a better way to trade rather than looking to trade counter trend. Forgive me there, trend trade. That's quite a tongue twister to keep saying. So again, going to the example, what I'm looking to see is a clear price trend forming, and then I'm looking to find clear momentum building against the trend. So in this example, again using sterling dollar, we can see that as price was moving within this broad downtrend, again, instead of RSI moving lower in tandem with price, confirming the bearish move. So you can see initially when price was selling off here, RSI was hammering to the downside, pushing lower and lower, confirming to us that there was increased bearish momentum in the market, and price was likely to continue lower. However, from this point here, from the September low, we sort of get this capitulation to the downside of bearish momentum. And from this point here, although price is still grinding lower, we can actually start to identify bullish momentum building in the market. And you can actually note that the momentum building is so orderly, in fact, that we are able to apply a bullish trend line. So this is simply a straight diagonal line applied from the low, joining the successive higher lows in the same way that you would a bullish price trend, effectively. So I can apply these lines to the chart, and in these circumstances, all I'm simply waiting for is the point at which the bullish momentum, the bullish channel, gives in, and we see momentum break lower through the channel line, and then I'm simply able to enter or look for price conditions which match my anticipation built around the breaking of that bullish channel. So we can see that as price sold off, bullish momentum starts to build against it, so highlighting divergence in the market. Buyers are trying to push price back up, momentum is driving back to the upside, and then what we get are these failure points whereby these rising trend lines concede and momentum rolls over and once again turns down. And you can see highlighted on the chart the specific areas where these RSI channels gave in. You can see here that after we bottomed out with the very, very oversold momentum, the RSI indicator, in September of last year, so where we got a particularly low reading there of around 15, we then started to move back to the upside, showing that bullish momentum is building in the market. So they're trying to push price back up, but you can see the price is still grinding lower, and at the point that we break down through that rising bullish channel, we can see that we get that large bearish candle there, which would act as a short entry to the market. Now again, we can see that after we break down through that rising RSI channel, we then start to build another channel again. So we reach oversold readings again on the RSI indicator, and we then start to bounce higher, showing that once again bullish momentum is building. Once again, buyers are trying to drive price back up, but once more we see the rising trend line concede, momentum turns lower again, and as it does so, price follows suit, and we drive lower within the overall dominant downtrend that we see. And then we see a final example of it here, and this is a really great one actually, because what we actually see here, in line with our bullish momentum, our bullish RSI channel rather, we actually see a corrective bullish price channel against this broader downtrend. So these are even better situations to watch out for, where you have a corrective pattern forming in price against the overall trend, and then we also have a similar bullish channel building in the RSI indicator, and then again we see RSI breaks down through its rising trend line, and price breaks down through the what would be there a rising bullish trend line, and continues lower in line with the overall downtrend. So this is a really clever way that you can look to use the indicator, and as I say, the conditions that I'm always looking out for are that I want to see a clear price trend, rather bullish or bearish. I just want to see a clear trend. So again, I'm not looking to apply these methods all the time. I'm not looking to apply these methods every day to every chart. I'm waiting to find the methods. I'm waiting to find the conditions rather, which match what I have in my mind as being the ideal conditions to operate these various methods of using the indicator. So as I can clearly highlight a price trend forming and then look to trade indicator divergence, similarly, as I can see that we have a dominant price trend forming, I can then look to trade breakouts of momentum channels in RSI in line with dominant trend. Okay, does anyone have any questions about that? Brilliant. Okay, well, you're following this very well, so I'm very pleased that I'm delivering it in a clear manner, and you're taking this on board. Again, please just type if you have any questions, and I'll do my best to answer them. I'll stop and answer them anyway. Okay, so that's it for the slides. So these are the basic methods that I'm employing when I'm using the RSI indicator, or at least these are the various ways in which you can use the RSI indicator. So what we'll do before we finish is just take a quick scan through the live charts, and I'll highlight some of the recent setups, or some of the current setups rather, that I'm seeing on the charts in relation to the RSI indicator and these various methods which we've just discussed. Okay, so let me just bring the MetaStock charts over the beautiful slideshow which we've been enjoying, which I've slaved away over. Okay, and so this is the dollar Swiss. This isn't a particularly great one to use because obviously we've had price heavily distorted by that large spike low in January following the S&B removal of their currency peg. But even looking at this chart, what stands out to me immediately is that we have a clear indication here of, now this isn't textbook RSI divergence as we saw in the slideshow. However, if we're looking at price moving higher here and then we get a corrective leg lower, we can see again that what we get is a move to the downside, which isn't supported by the RSI indicator. Now, as we see price moving higher, rather, I'm looking at the wrong chart. As we see price move up into highs, we can see that we register this oversold reading, this overbought reading, however. And then as we've just recently made this new highs, we've actually pushed higher here and made a new high. So I'll mark that up. We can see that RSI is actually lower, signaling to us that bullish momentum is likely leaking from the market at this point. So this is a good chart to keep an eye on over the coming days and weeks, I suspect, because where we get price moving into these key structural levels and RSI not confirming the move, and again there is a strong likelihood that we start to see a reversal here. So if we start to get some candle closes below this horizontal level, we could be due a pullback in the dollar Swiss from these levels. So that's definitely one to keep an eye on. What else is in the windows? The loonie, the dollar CAD. Okay, yeah, so this is a good one. So what we've seen happen in the loonie, actually similar to what we saw in the last chart. So we've seen the dollar ramping up against the Canadian dollar since the early summer, and we've just recently started to top out and put in some sort of topping pattern, or at least a corrective pattern lower. And what we can see happen here, look what's happening with RSI as we're making these consecutive highs. So as we started to top out in the loonie, as price started to put in these highs, these recent highs, look what was happening with the RSI indicator. It wasn't supporting these moves at all. So on each further push higher, we can actually see that the RSI indicator was moving lower each time, confirming to us that bullish momentum was leaking in the market. So looking at that chart, from the methods that we've just discussed, it should hopefully be clear to you how you could create or identify trading opportunities from these levels. So I mean, initially what you could be thinking is that where we saw the failed double top here, so where we traded up into the August high, then sold off, and then traded back up into the August high over September, we saw price push through, RSI showing clear bearish divergence, and then we start to get these big bearish candles with price heading lower. So these are the type of scenarios where once price ducks back under these key levels and starts to close, or we get some consecutive closes, you know, you can look to take a chunk out of the market there, trading a continuation lower, as suggested by the RSI divergence. I mean, what we could actually even apply to the loonie at this point, and it's a situation that we just saw previously, is that we have a price channel forming rather. So we can see that price was moving along this bullish trend line, and then again to the top side we're moving along, respecting the channel high. We're moving higher in this bullish channel, and the price breaks lower. So not only could you really trade this a clear example of RSI divergence at an important structural level of double top, is eventually bearish price channel. We had bullish movement in RSI. Well, in this situation, what we can see happening is price was grinding higher in this bullish channel. RSI was moving to the downside, signaling a potential bearish reversal. And again, a couple of candle closes below that bullish trend line, and you have a nice short entry there that yielded a couple of hundred pips before we got this reversal higher. And we can see actually at the moment that we're just testing the downside of that broken bullish trend line now. So it's going to be interesting to see how this plays out. From what we just saw with the divergence with dollar Swiss, it is possible that we see some further downside action from here. We'll have to keep an eye on that over the coming days and weeks and see how that materializes. Obviously, the RSI is not the be-all and end-all of what happens with any currency pair. However, in terms of discussing possible scenarios, we want to reference the methods that we just looked at and see if we can identify opportunities. And so we can see that there were clear shorting opportunities in the dollar CAD from the breakdown from the double top with the bearish RSI divergence, from the breakdown of the bullish channel with the bearish RSI divergence. Euro sterling, okay, and this is another good one to look at. So again, as we saw with the dollar CAD on the top side forming a double top, what we saw with the euro sterling here, having sold off in a very sustained manner from a 2013 level most recently, is that we bottomed out this year over the summer period, and we put in an initial low in March from which we saw a multi-month rebound. So we made that initial low in March. We then bounced from that level, traded higher for a couple of months, and then we've just recently, in the last couple of months, well, not recently, time is flying. In July, rather, we came back down and moved through that level. And again, look what was present in the market as we pushed lower. So as we first of all made an attempt to break down through that level here at the end of June, and price was rejected trading higher. We then made a proper break of the downside level. We pushed lower, and as we made that new low, so as we made a new 2015 low in the euro sterling, look at the reference that we can get from the RSI indicator. So whereas we were heavily oversold when we made the initial 2015 low, look how bearish momentum has leaked from the market at the point that we make this new 2015 low. So we can see quite clearly that price momentum rather has leaked from the market at the point that we make this low. And again, going back to the methods that we discussed, all we want to wait for in this scenario is an opportunity to trade the anticipated reversal. So depending on how you look to trade or how you look to enter the markets, you could be thinking that a couple of candle closes back above this level gets you in with a stop somewhere below the low, and you trade the anticipated reversal. Now, going back to the more advanced levels, the more advanced methods rather that we were just discussing, what we can also see apparent in the market at this point, and this is probably a great one to highlight as we end the webinar, is we're actually seeing an example of bullish RSI channels building against a broader bearish trend. So what we can see happening here is that as price has sold off and stalled out over this period, RSI has been building from its oversold levels, trading higher, and we can see that we held along this bullish trend line here, and we've just recently broken below at this level, signaling that there is potential downside to come in the euro sterling. So whilst we saw a bullish reversal signaled by the divergence that we saw on the break of that key structural level, we can also keep an eye now on what perhaps is a more medium to longer term trend resumption play, whereby the building RSI channel has broken and price has broken to the downside also. So I've been monitoring price now as we move back down into a test of those key lows to see where we go from there. So that's a good example there of a dual use of RSI. Like we saw with the dollar CAD, we had the price channel as well as the key structural level divergence, and here we've seen the key structural divergence alongside the channel, the actual RSI channeling itself. Okay, so that's everything that I want to share with you in terms of the RSI indicator and these methods. Now, if any of you are particularly interested in this method or in learning more about the RSI indicator, I strongly urge you to take a look at the Littlefish FX website. We have a whole host of free material discussing the RSI indicator and all sorts of other indicators, looking at loads of different trading strategies. We also have the Forex Master course, which goes into great depth about all of the key aspects of technical analysis. And as I say, our live trading room is currently on a 30-day free trial. So if you're interested in getting involved on a daily basis and have questions you'd like to ask, would like to share analysis and talk with myself and the other traders, then please do check that out. And I actually, going back to the slide just quickly, have a discount that I can share with you that if you apply to the course or any of the indicators will secure you a discount. So are there any questions I can answer there, guys, just before we wrap it up for what is my evening here in the UK? I'm not sure where you are. There are some congratulations there to me for my awesome accent. That pleases me greatly. I will thank my parents. They'll be very proud of me. Brilliant. Well, look, I'm pleased that you guys followed that clearly, and I hope that you're able to appreciate the power, the potential power of using the RSI indicator. And as with all of the technical aspects that I teach, I always urge people to really do their research and their homework. So don't go jumping into the markets tomorrow having watched one webinar on RSI. Spend some time looking through the markets, studying these methods, highlight potential setups based on the methods that we've discussed, and then note down the reactions that you see and start to build an idea of the type of reactions you're getting from the setups you're highlighting. And then before you know it, you will be clearly identifying strong tradable opportunities in the market. So that is how I suggest you proceed. And once again, I'd just like to thank you all for joining in, and I look forward to catching you again for another webinar. Thanks a lot, everyone. Have a great day or great evening wherever you are. Cheers.